Hello, Ryan. Are you there? Morning, everybody. I think we are waiting for Ryan to appear. He seems to be.
No, I'm here. Was I? Oh, this stupid Zoom. My mic was off mute, but unless you push the button on the bloody Zoom, it's changed now.
Really?
Oh, yeah,
I didn't
they
have to
do
do
like they do like changing these bloody things.
it. Mm,
So before, when I open Zoom, it's automatically unmuted in Zoom, and I use my mic button.
all right.
Ugh. And I was talking into the mic saying you were muted. let's
Anyway, we
let's
made it. We
let's
did it. We are here.
We got there. Let's start again. Good morning. Welcome to the Flow Show. 11th September. We've got US CPI and the ECB coming up. Blah, blah, blah. Morning, Kay. How you doing?
Morning, Ryan. Morning, everybody. Yeah, have a good day.
Yeah, I'll get someone to cut out the beginning part of that show. Right. Anyway, let's go. Let's go. Right. Start with some data. Oh, I haven't even got my calendar up and running. Look at that. Oh, so far behind. So much to do. Click, click, click. Right. Yes. Japan data we've got to look at. A couple of good things. Some more good news. This is the Business Sentiment Index, BSI. Can't say I ever look at it more than a cursory glance, but it's coming out positive again. Large manufacturers turning around a deficit last month and a less deficit expected to post a gain of 3.8. That's the all that's the large manufacturing index. The large all industry index for Q3 coming in at 4.7 from minus 1.9 prior. So yet more data going the right way for Japan and the Bank of Japan. PPI data out as well. Year-on-year numbers confirming a 2-pip rise to 2.7, although it was less than that because the prior got revised down to give it that 2-pip gain. That was a touch softer on the month at minus 0.2%, but inflation still holding up there in the main numbers. Bloomberg have been asking people about the BOJ and what they call BOJ watchers. They are expecting a hike by January, and 36% of those eagle-eyed watchers are touting October as the date when they will hike again. So everyone's playing the guessing game, particularly after that sources piece the other day. We've had pretty much confirmation, according to Kyodo, and if you're wondering why dollar yen's popped this morning, while it first started popping early this morning, pretty much on this headline that Takaichi has told XPM Kishida she's running for the LDP chief role. She's seen as the most bearish for the yen. So that confirmation, that hat going into the ring, adding to the yen's woes. Pretty much as expected when that confirmation came through, Kay.
Yeah, I think so. A bit of an announcement effect, maybe, to confirmation of, because the timeline for when dollar yen started to move higher, it pretty much corresponds, and we see all the yen crosses as well being pulled higher again this morning. Yeah, she's obviously Abe version 2. If she would get it, and worth noting that she was the runner-up of the last LDP leadership contest. So she was the one that went into the runoff with Ishiba. So yeah, pretty understandable that the yen is trading on the defensive again. It's always a difficult read on those Japanese data as well. We've seen so many times in the past that you get the data, you get a blip on the data, and then everybody forgets about the Japanese data. It's strange because the Japanese data have been pretty decent of late, and yeah, but it's all brushed under the carpet when it comes to politics. Eh?
Yeah, and again, we're talking about small margins here. When the market's trying to guess whether the Fed are going to cut once, twice, three times in the rest of the year, or however many next year, everyone's looking at the Bank of Japan. They might hike once, twice in the next 12 months. So
Yeah, exactly. That's
it's
that's the main thing, right? I mean, they are not going to hike up to 2% or 3% like other central banks may have done. They are still going to remain in current context where they are right now. I'm having difficult to see which horizon could we bet on that they would even take it above 1%, you know?
yeah, exactly. So if you're looking at the Bank of Japan and thinking, oh, if they start hiking, dollar yen's going down to 140, don't
No,
hold your
no,
breath.
no.
At most, you might get a bit of a reaction move, likely a week before they hike. When the sources pieces tell us they're going to hike, you'll get that reaction, and then it'll be done and dusted again. But anyway, that's what's expected, and we're going to hear more on the political side of things as the days draw closer to that election date, 4th of October. Over at the RBNZ, Governor Dovesby, as we now call him, instead of Hawkesby, says that the bank faces a test of trust and confidence, not as much as the Fed and some of the others are anyway. He says the central projection for the OCR official cash rate is to fall to around 2.5% by year end, but the timing depends on the economic recovery. Says the speed of New Zealand's economic recovery will influence the future OCR path. He's seen signs the economy will pick up in the second half of the year. Okay, so they're expecting the OCR down at that level. But then they're also expecting a pickup in the second half of the year. So does that put them on pause, or how did we play that one?
Who that? Sorry, I was just busy on something else. Which one?
LBNZ.
Yeah, the RBNZ. It's probably going to be as usual, mate. A difficult, bit of a difficult read with them. I think they are. They would love to bring them down, but I don't think there is really enough in what we see in actual data to price too much in, right? I would say their path is still there, but it may from here be a very slow one.
Yeah, so they're at 3%.
Yeah,
So
3%. I mean, it doesn't give too much leeway anymore if you look at where inflation, etc., is. Huh?
yeah, exactly. And indeed, if they expect an economy to pick up, that will probably bring inflation with it. So
Yeah.
yeah,
Yeah, the thing is, I mean, there as well. Look at employment too, because they have seen a pickup in immigration again in the last numbers, and where that can be positive for an economy, it may give a bit of a distorted picture in the employment department for a while as well. So yeah, want to keep an eye on how those numbers and what's in those numbers going forward over there.
yeah, and also notable, perhaps a little bit pick up in Aussie inflation expectations there. That number rising to 4.7 from 3.9. Again, not something I pay a whole host of attention to, but could be relevant for the RBA, who are staying more on the hawkish side of the street,
Yeah.
or the undovish side of the street, shall we say. Right, coming over to the blokes who like to put holes in cheese. SMB's Schlegel says that the bank is going to start publishing rate decision summaries 4 weeks after meetings. So they're, in Swiss terms, opening up some of their monetary policy deliberations there. But they say summaries will not detail individual board members' positions. They're really just joining other central banks in publishing minutes and all the guff that goes with it. Obviously, 4 weeks after, it's going to be old news anyway, and even older news because they only have a monetary policy meeting every quarter. He also says the bar is high to go into negative interest rate territory, but they will do it if really necessary. Kay, what do you reckon? You reckon they're going negative again?
They may be forced to if the numbers continue to be anemic as they are. I think the most important thing here is to watch what exports are doing, and there's still that pharmaceutical thing overhang, and I think that if the US, sorry, the Swiss corporates moan again hard enough, they could go into negative. But we also know from prior excursions into negative territory that they have that tiering system, right?
Yeah.
And it could mean that they take the interest rates officially into negative territory, but with the tiering system, that there's not too much going negative there. The details are a bit. I'm forgot about most of them, but I think it's like you really need to already have like a lot of excess cash to really pay money on that. And I'm pretty sure that companies and wealthy people have enough ways not to have too much Swiss franc in the portfolio as to have to pay those negative interest rates. But yeah, psychologically it could be the case, because if you go into negative interest rates, the de facto your the borrowing costs will be pulled down as well. So for companies issuing Swiss bonds or borrowing in Swiss franc will get cheaper again. So that may still have an impact, but I wouldn't rule it out. But we have seen already that Schlegel is not that interventionist as Jordan was, right? So for
Not
him, the
yet.
bar is higher than for Jordan. Jordan may already have gone and may already have intervened in Swiss. Now, the latest numbers haven't shown any indication that they have been involved in anything in Swiss franc lately.
Yeah, he's less interventionist at the moment. But we know
Yeah,
how that
until
ends.
he'll be forced to, yeah.
Yeah. And do you think if they did do you think the market's ready for them to go negative? I mean, you wouldn't think it from the Swissy, although that thing's
Yeah.
locked in its own world.
The
But
thing is, there's so much money in Switzerland going around, but there's maybe not that much money really in Swiss franc on the accounts in Switzerland. So
yeah,
that's why this impact of going negative. Does the market really have to be ready for it? I think the market is kind of hoping for it. I can't see anyone with the numbers that we have now, with the interest rates being at zero. What is the one reason, apart from maybe fiscality also, or some redemptions also? What is the one reason? Give me one good reason to be long Swiss franc. So I don't think the market is long Swiss franc. Only the central banks have been incrementally increasing Swiss franc in their FX reserves because of risk scenarios. So that's the only reason why you would somewhere be long Swissy. But if you're not a central bank, if you're market to market, there is no real reason to be long Swiss franc.
yeah,
So I
yeah,
don't think that in the market, yeah, maybe it may push the market to go short Swissy again, but there is no reason to be really long of it, right?
yeah, absolutely. Right, coming over to UK politics, and PM Starmer has been given a bit of a kick in the shins. FT reported late last night that a big pharma company, Merck, is pulling out of a 1 billion investment into a research centre in London. They're currently halfway through building the thing and they're pulling out. And they're saying that the reason they're pulling out is because the UK is uncompetitive. That will be a big blow to the Chancellor as well. There is obviously some pressure from Trump and the US, as we've seen with pharma companies. One of their reasons as well from Merck is that prices in the UK are too low. Obviously, Trump's on a drive to reduce prices in the US and get more pharma companies back over there instead of abroad. So this is also part of it, but still that headline is not good for Starmer. And I'm going to talk about this. I'm not keen to talk about this, but I'm going to talk about this anyway because it could have political ramifications for those that do not know. We know Trump's in the midst of this Epstein stuff going on in the US, but for those outside the UK, there's some of that stuff going on with our US ambassador Peter Mandelson, who is a tight, or was a tight friend of Epstein, and there's a whole thing kicking off here into some communications that he was having with Epstein when he got arrested and blah blah blah. Anyway, the political ramifications are that Starmer's being called out for putting this guy in an official role despite these connections with Epstein. Now, some in the press, both sides of the pond, are tying this with Trump to say that if Epstein gets fired by Starmer over his connections, if Mandelson gets fired over his connections with Epstein, how's that going to translate to Trump and what the US should do with Trump and Epstein? Now, as I say, I don't want to get into a big thing of this because it's politics that we don't need to be involved about with trading, but I'm raising it in case you weren't aware. Trump's due to come over here, I think next weekend, 16th, 17th or something like that. So this political mess could all be blowing up around that. So anyway, just forewarning you on that side of things. No real discussion more needed into that. Right, data yesterday. Yeah, go on, mate.
It's funny that Merck thing actually didn't come out last night, but it came out well during the day, and I didn't report it because it was only 1 billion sterling. But yeah, you're right to talk about it. At the same time, Reeves was in the meeting with entrepreneurs also, that she wants to get rid of a lot of regulators. There's too many regulators in here, and that was roughly at the same time that Merck thing came out somewhere in the afternoon yesterday. So yeah, I think one ball back in the middle and start again the game.
Yeah, very much so. And let's see what trouble she's heading for in the autumn into the winter. Right, moving on to data out yesterday and that PPI data. And this is becoming very telling at the moment, and we'll explain why. So we got much softer numbers than expected. Can be par for the course, as we explained with PPI. It's often a much more volatile data point in terms of variation. But that, even so, was still a very big move down. PPI was expected to rise to 3.3%, came in at 2.6%, so worse than expectations, lower than last month. The core doing the same thing as well, 2.8% from 3.5% expected. This should have been icing on the cake for dovish traders, but we saw wasn't even a 5-minute sell-off in the dollar before it came ripping back again. So that's telling us something. It's telling us we've seen this jobs revision that saw a sell-off and a quick reverse. We've seen PPI that saw a smaller sell-off and then a bigger reverse. This is the market looking like it's fully on board with what's happening with this data, the jobs data, and what the Fed's going to be doing. So that's very important for A, what we see from the CPI data today, and B, how the market is going to be going into the Fed next week, which is what the last couple of weeks has all been about. So just before we look at go into detail in that, let's look at what we've got coming up for CPI, because we could get a similar reaction. Headline is expected to go up, core is expected to stay unchanged. So if we get soft numbers again, we could see a similar reaction, and I wouldn't rule it out. The shock now, the bigger price shock would be if it comes in hotter than expected, or maybe even unchanged. That's just going to add to the dollar buying that we've seen. So we've got a bit of a shift in expectations about how the market's going to react to this data. Kate, the CPI is obviously should be the bigger number, but the market's already been given a jolt from the PPI.
Yeah.
Are we going to see the same sort of thing today if it's a soft number?
I'm as I said in the room, I'm going to look at the glass half full. Okay. I'm as we were talking about it briefly last week. It just could be that the bigger players, and that is going to be already partially answering what Ali just asked in our chat room, in the chat room here about why on the euro dollar not ramping higher. it may be that the bigger players, they, because we always talk about September, it's the back to school day for everybody, including the bigger investors. Could be that they were waiting for this round of inflation data to come out and then put that in their models and start to take a direction again. That could be. On the other hand, the reactions that we have seen now um, are has to be said lukewarm. Yeah, the jobs picture has markedly deteriorated versus the numbers that we have been presented before. The market has been trading parts of that, but there is no immediate follow through. That also hints to me that there's a lot of what been going on now. It's hard to break ranges, but I think we have seen maybe people starting to position. A lot is going through to options, but then the people need to start to trade the other side because of the hedges, and I think that's where we are still at now. So it could be that after those CPI data today, that we have the real moves potentially starting, especially if it would come in, let's say, doesn't have to come in much lower than the expectations, but just like a couple of ticks lower than expectations, then the market is probably, and I think the bigger players are probably going to put all those numbers into their beautiful model and potentially pick up again what they were doing before the holiday season. So that's where I think the market is roughly at right now. At least I'm going to say, Ryan, honestly, I hope so. Because if we can't break out of these ranges, we may be in for another week of just mooching around between give and take 116 and 117 and a half on the euro dollar, for instance, or even not that much if really the option people are trading both sides of whatever move we are going to see. So, but hopefully those longer termers we're waiting for what the inflation picture is to combine it with the employment picture and then take a direction.
Yeah, yeah. I'm just going to go back to your first comment and call bullshit because I've never seen your glass half empty, mate. It's always full, whatever time of day. And as Gavin just noted in the room, and I've just heard as well, it seems that Peter Mandelson geezer's been sacked now by Starmer. So we'll wait for the fallout from that and what it might do. No market implications to that, I should add. Right, further data from the US of that PPI. We got wholesale inventories, the final number coming in at 0.1%. Nothing to write home about there. But trade sales had a nice, decent boost of 1.4% in July, month on month. So once again, we may be seeing a bit of weakness in jobs, but the rest of the economy is still ticking along nicely. And again, something that's got to be factored into the back of your mind. We're looking at other stuff like inflation. More good news for the US. An absolute gangbusters 10-year auction yesterday. The yield obviously well down. It came in at 4.033%, which is well below the when issued number of 4.046%. Bid to cover a big high, 2.65 versus 2.35 prior and above the average of 2.556. Indirects was the second highest in history at 83.1%. Indirects are, foreign investors and the like. Directs, which is all institutions, banks and whatnot, the lowest take up since April at 12.66%. And primary dealers, who are usually the mopper uppers, another historic low, 4.2%. What do you think of that auction, Kay? Is that people locking in ahead of, potentially the Fed taking rates much lower?
Yeah, or the non-believers having to go to auction because because they may be a bit maybe have been a bit surprised with what's going on. Let's not forget that the market didn't like bonds for quite a while, right? Because of the fears of inflation, etc. surrounding tariffs. It may be kind of a forced one that people went to auction in such a massive way. But it is a very an extremely good auction, I must say. But it's always it's funny, those auctions, because it's always a double-edged sword somewhere. You could actually, if people go massively to US auctions, it could actually be a good thing, because that means um, that they have confidence in what's happening in the US, and you want to have the US assets. In this case, I would argue, though, that it's rather not completely the opposite, but I think it's people who were under invested in bonds, and now having to go after those employment reports, having to go to buy back some of their shorts, probably.
Yeah, absolutely. Right, on to the Fed, or on to Trump and the Fed. Trump's man, Miran, he passed all his, whatever it was, the vote thing that went through
Physical
yesterday.
tests.
The what, sorry?
The physical tests, like when you go to do a football team.
Yeah, the mental tests, like can you add up? And how many rate cuts does he need to do by next week? So anyway, that all should all be rubber stamped on Monday, which will mean he's at the Fed in time for the FOMC start, which is on the Tuesday next week. The FOMC runs across 2 days. They start on the Tuesday, deliver on the Wednesday. So he should be in place by then. Gold is their CEO expects a 25 pip Fed cut, and then probably 2 more into the autumn. Thinks we could get 1 or 2 other cuts after next week's supposed cut. Trump put out a notice to the EU that they should tariff China and India by 100%. Reuters sources say that the EU is unlikely to do that at Trump's request. What they do otherwise remains to be seen. Mexico's still trying to be or keep themselves in Trump's good books. Economy Minister Ebrard said new tariffs are to be put on light vehicles and auto parts from Asia. They'll be raising tariffs on cars, particularly from China, to 50% from 20%. That's been one of Trump's big moan-ups at Mexico, that a lot of stuff comes from China through Mexico into the US. Obviously for much cheaper, and that's what he's putting a block to. So Mexico trying to appease the orange one with that. Obviously, Trump is going to appeal the ruling that blocked the removal of Fed's Lisa Cook. So that bum fight is going to continue in the courts. I haven't seen when that might come up again. I don't know if it's going to go as fast as we're expecting from the tariff court case going on. This Russia-Poland stuff dragged on all day yesterday. Lots of people, I'm not dismissing the seriousness of it, but lots of people, making big points about it. Anyway, Russian news sources said that the Russian chargé d'affaires said drones shot down in Poland came from Ukraine. So he tried to pass the buck. And the Kremlin came out saying that we would rather not comment, as this is for the Defence Ministry, which is a massive can kick. But the Defence Ministry came out saying that they didn't target objects in Poland. Trump finally truth bombed from the toilet about the whole thing, saying, "What's with Russia violating Poland's airspace with drones? Here we go." That was it. That was his complete rundown of the situation. Right, that's it on the headline front.
Oh, you get broken up?
You got anything else, Kay?
It seems that you got broken up.
Mr.
No,
Kay,
not
Mr.
really. Well,
Kay, you there?
we have that unfortunate shooting of one of Trump allies, but yeah, unfortunate news. But for what the markets are concerned, it's not really market moving. But just a very unfortunate fact.
Yeah, yeah, very much so. Right, I suppose we should look towards the ECB. Firstly, I'm going to say about
Really?
Ali. What?
Really?
Oh, what am I looking? What am I looking for? Well, we don't have to. We can all go. We will take 10-minute break, go down the pub. Oh yeah, just opened. 11 o'clock. Pub's open. Yeah, first thing I'm going to go to Ali. Ali, you're asking the same questions you do every time when we get to these sort of things. You know, why is the currency not doing this? Is it going to do this? Is it going to do that? You've been on this show a long time now. You should know the answers to these questions already. Okay, because if not, then you need to, listen up a bit more. You know what the market is doing going into the ECB meeting. You know that there's very little expected from the ECB meeting. So asking whether they're going to be hawkish or dovish is a bit moot. Okay, the ECB are on hold. There's no reason for them to change policy at this meeting. They're not going to change policy at this meeting. Well, they could do because you never rule it out. There's always that slim risk. They have no need to change policy. They have no need to change their language about policy right now. The only thing that we're probably going to get that might be moving, aside from whatever Lagarde may or may not say, is the forecasts and where they see policy from this point forward. They have no reason to rock the boat at all. The message is the same. The economy might start picking up. There's still tons of risks to the downside. Inflation is in a happy place, but they'll be attentive to if it starts getting to an unhappy place, blah, 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 blah. Okay, we know all that. We've known all that for weeks. There is no surprise for this meeting or big chance of a surprise at this meeting. So what's the euro got to do on that? Nothing. Absolutely nothing. Now, what the euro might be doing is just hanging around because at the moment the dollar side is stronger. So we might find that if the dollar is moving elsewhere and the euro is not doing an awful lot over the ECB, it's just waiting to get over the hump, make sure that there's no risk headlines from the guard or anything, and then it will go on its merry way, whatever the trend is. Okay, so as I say, you should know all this now because we've been explaining this sort of stuff for long enough. So I want you to start putting that knowledge into action. I want you to start telling us what the euro is going to do over the ECB. Okay. So yeah, I've got low expectations for this one. Low expectations for what the euro does on this one. And really, yeah, it's if anything, it'll be what comes in the forecasts more than anything else. Okay, anything different?
No. In my opinion, should be one of the more straightforward meetings in the ECB we had for a very long time. They've all spoken. We know there's a bit of discrepancy between the doves and the hawks, but that brings everything back into the middle. And I think it's going to be. It would be a real surprise if it's anything else than an absolutely flat neutral meeting. This one.
Yeah, as usual, I'll probably spend more time taking the mick out of what Lagarde's wearing, the colour of her tan, and whether De Guindos speaks or not.
Her tan will be important now.
Should be super topped up. Should be super topped up. I mean, we might need sunglasses for this one. I reckon it could be that bright. But yeah, sorry guys and girls, but we've got low expectations for this one whatsoever. Already talked about the CPI, so we know what's coming with that as well. Is anything in the CPI that might get the market moving? We got some earnings numbers as well, Kay. Obviously, we've got jobless claims coming as well at the same time, which we'll keep half an eye on. But things like super core and anything like that, is that going to get the market moving at all?
Unless we come out far from expectations, I don't think it's going to change much. The only thing is, as I said, I hope because that would make things move, even though we have maybe just close to expectations outcome. The only thing I hope is that the longer termers, the bigger boys and girls have been waiting to get over the inflation hump to pick a side. Obviously, if we get lower numbers, the debate about whether the Fed could do 50 this month is going to be wide open, and probably the dollar will get a slap around the ears on the back of that. But then is still not a done thing. So no, and for the rest, but you do have what do we have? We do have a 30-year bond auction there, and there's always a lot to do about those long ends. And that may be an interesting one because that's also one where speculators have been, I think, a bit short of because of inflation fears and the big beautiful bill and whatever. That may be another interesting one to keep an eye on come 6 p.m. London time.
Yeah, and it'd be interesting if it's not as strong as the 30-year, or
Yeah,
if it goes the other way, because then that will show where the interest is in the curve.
yeah,
Um,
absolutely.
so one to keep. Well, I won't be keeping an eye on it because it's out at dinner time, but I'll see what it does in the morning. Anyway, so, Ali, I hope you don't think I'm being too harsh on you. I am from the school of tough love. Um, Half the reason we do this show and we set it out the way we do and we explain things the way we do is because we want you to learn about it. And you need to pick this up. You need to put it into practice. It's something I'm telling Bran often enough. He's been with us long enough, learning. You need to put that to use. Have confidence about what you know and what you've learned over the last year, be it from us or be it yourself from trading. So that's why I'm trying to push you, mate. Not because I'm having a go at you. Right, let's have a look at some prices because we didn't get a good look yesterday. Going to kick off with dollar yen because I've even added to the position. I'm staring into a black hole. Well, it's not a black hole, but yeah, I had to scratch an itch the other day and get some shorts on, and I've already broken my own rule of messing around in the middle of the range, and I'm messing around in the middle of the range. So I am short dollars. The market hasn't reacted how we all thought it might do, i.e., selling off if we got softer numbers. So you can't ignore the price action. Okay, even if you've got a plan and the price action isn't going your way, you've got to note that, and I'm noting it. I've added to my position just now 147.94 my shorts, and I'm short from lower down 147.40s and 140 near 147 as well. I had already in mind the plan to trade the range. Okay, so I'm still potentially happy to sell values up to the top of the range, but I'm going to be watching this CPI data very, very closely. And if it looks like it's going to do the same thing, I get a dip, then I might just hook off that dip and then maybe try again, reloading it a bit higher. So we'll see. But as I say, this trade was something that I was looking to run into the FOMC. So we've got a week to go, but I'll be judged by the price action. Other than that, we are pretty much bang in the middle of this range. If we take it the 146.80s, 148.80s, and then obviously we've got these little extension points hither and thither, such as which we touched the other day down at that 146.30s. So the Fed is really the crux. Is what they do there going to bust the dollar into new levels? Is it going to see euro dollar getting up to 120, as a lot of people are looking at? Beginning of the week, I would have said we were looking certain for a bust up in euro dollar, but the price action hasn't confirmed that. So got to be a bit more cautious. Again, the Fed could turn dovish and we could get a rally all the way up, maybe, I don't know, 118s even, maybe 119s. What happens after will be equally important. Can it sustain that? Or is that just a market reacting and then we're going back into the range? So it's all to play for. It shows just how the pitch can change from one day to the next. It was looking bullish going into the week, coming into this week, the euro, not looking so bullish now. And that's trading for you. You've got to adjust with the market. I think dollar CAD, if I'm going to pick a play for the CPI, dollar CAD, I think, is potentially the best option. That's what I'll be looking at anyway. We've had a break up through this 38.60s. We had this small short-term bit of resistance here in the 80s. We've busted through that. So we've got a good chance of heading up here. And this is what I mean about looking at trades or opportunities when you've got a market going one way into a data point. If we get soft CPI data and the dollar dips and it follows the same as happened on the jobs data, same as happened on PPI data, then this is a pair that's going to dip and then it's going to rally. And if it rallies, it could well rally up towards the highs or even through those highs because this has got the price action behind it. So I've got a feeling we probably won't see a massive dip in this on soft PPI, maybe down to 138.50s, something like that, just around this sort of area. That would be a gift, I think, 138, 138.20. But this is one I'm going to be looking at buying a dip on soft numbers over the CPI data. Okay, you got anything in particular you're looking at for the CPI?
No, I'm still a bit long Aussie, still a bit short dollar Norway. As people know in our room, I let my gold go because thought that there may be a bit of a correction coming. The Aussie again. I can look at it if you want, but no, just keep it there. So we had this move above 66 and a quarter, but then in all the dollar pairs that we have seen, it is tough to keep breaks going. But I think on the fundamental side of things, Aussie is one of the better ones still. So in case we get a bit of a weaker reading or a reading as expected, and we get a little dip maybe into the 65.80 or so, I may add to this one. This is one I'm gladly continue to look at the dollar short side of things. If of course too sticky, I may actually, I don't know, throw it in a cross or so, because Aussie yen is trying to really go for a walk higher. So this is one that I'm still basically looking relatively positive towards the Aussie dollar, and also Norwegian kroner. It's not really that energy is ticking up, but there's a bit of seasonality in there as well. But dollar
Let
Norway,
me bump it over to your case.
yeah,
We can show
okay.
people.
I'm going to have a look then at this dollar Norway and really on the daily, where is it? Here we are. You see that?
Yeah,
Yeah,
yeah.
on the daily here, we are now below 10. That's for one. On the really short term, we are also trading below 997. But look at those spikes here, and then we've broken down now. This could really if the dollar continues to come down, it does feel like the Norwegian kroner has some power behind it. I did play a shorty from here onwards, but then I bought them back, and then I only re-entered on that clean break below 10. But I think for one, we have potential to go and visit the prior low, but also the 50% of this whole rally from 2021 into 2025, the 50% comes in around 983, 984. If ever we get below there, there may be another acceleration. I think it's one of those dollars that could go relatively quickly because Scandis can be like your accelerated euro. We have seen that as well. Swedish, of obviously mostly, but even the Norwegian kroner can act a bit the same. So I think pretty decently defined risk right here, just above 10. You want to stretch it 10 or 4 or so, goes back above, the party may be over. But for as long as we are below this little zone here, it does look like this one is perhaps setting up for another move lower. It's just that I'm looking at this from the perspective as I usually do. If you look at a currency which can go one way, which is the best other currency to play it against, right? And I think Norwegian kroner and Aussie are two currencies where it's the potential to gain percentage-wise versus the dollar is bigger than for instance euro or so. And what else am I looking at? Yeah, the other side of the spectrum, and I fully agree with Ryan, is still the Canadian dollar. It's really big. I don't disagree. If we get like a little bit of a dip there, this is one that could be really bouncing. Why? Because of all those cat crosses being really, really, really big, and the Canadian dollar is really on the defensive. So this is also one that I'm keeping an eye on, and this is in full agreement with Ryan there. This is one of the currencies that could actually perform the worst versus the dollar if then the dollar turns around. Um, your Euro Swiss ally, it's one of those. It's such a miserable currency pair. Yes, it could come down, but you can't base it on the ECB. I think the ECB is going to be a complete neutral one. Yeah, you have a bit of a level here, middle of the road there of that range. To me, it's a flip the coin, but it does remain, globally speaking, of late, relatively offered. So you might be in the good there. I really don't know. It gets back down to low 93s. Keep an eye on those two lows here. You may want to take some off there, but that's the only words I'm going to use on the Swiss franc. I know when Derege is here and others, you're watching gold after all those moves. Um, I thought this may happen. Okay, yesterday I said it in the room. I think ahead of those CPI inflation data, we may see a bit of correction, a bit of position adjustment. It's exactly what we are getting here, but no panic. This is still extremely bullish, right? Even for as long as we are above 34 and a half, low 34s, the it's remaining extremely bullish. But there could be a bit more coming in store. I wouldn't rule out on a reactionary move that we are maybe even tip just below 3600, and then look at what's happening at 3590, 85, somewhere around there, 80, even 3580, prior low here, prior high here. What's happening around there? Because it could be that gold does a quick one like this and then starts to grind higher again. Besides what's happening in the dollar, besides what's happening in interest rates, etc., all the other conditions, geopolitics, hedges against everything that can go wrong, are still very much in place. And we know that Asia has still been buying gold, etc. It's the conditions are still in place, but I never rule out some kind of those moves just based on positionings, right? Because the positioning we must we must assume that there's been a big position built in this one. So just be careful. I'm not going to get too much involved if we do something like that. But if we break obviously the prior highs, this is 37.30 and maybe even higher. Okay. But I was also thinking yesterday, if you see a bit lower inflation, if you imagine that gold is an inflation hedge in a way, if inflation comes down, you also need a little bit less of the hedge. So this is bit of a a contradictory one that may also be at play here. So if you see a lower inflation data this afternoon, we could go for this, and then the market saying, yeah, but we don't need too much of a hedge, and still stick inside this range for a little while, okay? And then look at the other conditions why gold is still being very big. Silver, very interesting little trend line that has formed here. 1, 2, 3, and we are nearly here. Well, we actually went for a little test, and it's also on the 1 hour is the 200. I'm not usually looking at moving averages too much, but you can see that it has had a bit of a roll in the past. But it's an interesting level then. 40.85, we went very close, and it's holding that little trend line here. Similar as on gold, but not completely the same. You know the conditions. I've been speaking about that already often enough. We could go for a little walk below, but here too, for as long as it stays above 39 and a half, 39.80, it's still just even short term remaining very bullish. Okay, this is a short term trend line. We have seen those kind of moves in the past, and then shooting up straight away afterwards. Top side still respect those levels. All right, we tried to get through. We had one look, two looks, three looks at 41 and a half, 41.60. If it goes again, 41.50, 60, I think we're on our way higher again, the 41.80 top end of the channel, but it's been traveling inside. So I would still say respect what's happening in the channel in silver. I could actually see it's extremely bullish still, but I could actually see a bit more of this sideways action go, because I don't find an extreme lot of stuff being behind to really fly higher, unless one want to think that silver is beat because they need to rebuild all those drones that they are shooting at each other. That's also a possibility, of course. Um, Last one that I'm looking at is cable. Interesting, interesting in the range, but interesting, especially if we would get a lower CPI and we break above 135.90, then we may actually on the it's three tops now, right? And it's getting extremely interesting up there. Maybe the fourth time is bingo and we go up to 136.5. Looking at the global dollar situation, if we see a bit of buyers in the dollars, I think 134.80 is too close. 134.60, maybe 134.20 from where we started that leg higher. These are interesting levels to monitor. I don't think that there is enough here to revisit that 133.65.75. I could rather see some move like this if it has to come, and then do the move back higher. This is one of those that still is finding still a bits on dips. Where it's gonna head into late October, November on the back of Reeves, that's probably music for later. Back over to you, Ryan.
Thank you very much. Good stuff as always, Kay. Just a couple of quick replies. Michael, thoughts on Nikkei? I'll just share it quickly if I can. Where's my button? If I can find
Well,
it.
I can while you're looking it up on the Nikkei. I think it's all about Michael, that whoever comes into play as a new LDP leader, a new prime minister in Japan, they're always going to spend money, and I think that is why the Nikkei also is keeping its bit tone. And if it's Takaichi, it's going to be big spending, because she really is Abe version 2, and that's going to entail a lot of things, and going to be big spenders over there.
Yeah, and on the other side, the data is holding up. The data is doing well. They've got over the trade hump with Trump, so that uncertainty is removed. And yeah, it's probably the big whales going to work in Japan. And quickly on AD about the CME Fed Watch pricing of 50 pips. Two things: there's no trade in the 25 pip cut. You can't make money trading that now this close to the Fed. So if you can't trade that one, what's your other alternative to trade? That's maybe the chance of a 50 basis point thing. And it's also a bit of a mechanical reaction, a bit of spillover. You know, the trade is full on the 25, so the water's going to flow out of there over the sides and it's going to go into the 50. Yeah, it's I still think 50 is a very low probability, unless it's a 50. They decide to go a 50 and it's an undovish 50. But yeah, I'm not putting any importance into 50 pricing at the moment. Right, that's it for today. Join us for the CPI data later on Face, and we'll be jumping through those hoops and seeing what's coming. Thank you, everybody, for coming to the Flow Show. Have a wonderful day.